All right, guys, in this video, we're going to talk about a beaten down recent IPO that has massive potential going forward. This stock went on a massive run after its IPO, but has now collapsed 72% from its all-time highs. Now, of course, when it comes to IPOs, you never want to buy the hype. You want to buy the post-IPO correction, right? Vast majority of the time, when a company goes public, it goes public with a lot of hype. And it's almost impossible to live up to that degree of hype. And typically these IPOs will correct massively at some point following their IPO. And this is exactly what is happening to this company right now. So if you are a retail investor, there is nothing better than a post-IPO crash, because that actually allows you to buy shares without having to pay that massive premium. Because of course, if you're a retail investor, you're probably not gonna be able to get shares before a company goes public. And always after a company goes public, the following days, there's usually a lot of hype. Traders get in there, they bid up the stock price. So you really have to wait until that crash happens. So without further ado, let's dive into the video. The company that we're gonna talk about today is none other than Circle. So Circle is the world's largest regulated stablecoin powering global finance. So Circle issues the USDC stablecoin, which is a digital dollar, and it allows money to be moved instantly across the globe. So why is this important? Well, the reality is that stablecoins really have the potential to disrupt the entire banking system as we know it. The very idea that you can send money instantly across the globe with essentially zero fees is very revolutionary. So think about the banking system, the traditional banking system, right? They're closed on weekends, they're closed on holidays. If you send a large payment, it takes several days to settle. There's fees involved. Just a wire transfer, international wire transfer can cost $50, right? So Circle solves all of these problems because the payments are instant. It's backed by the US dollar, so it's stable. There's no currency, FX variables. The fees are essentially zero. So it really has the power to disrupt the legacy system. And that's very important. And you can see here, if we scroll down, you can see that they are sporting a 108% yearly growth rate. So there is a genuine thirst and hunger for these stable coins. So let's take a quick little look here at the stock price. So you can see that we are in a downtrend here. So Circle is down from its all-time high here back in June. It is down 72%. So it hasn't been good, right? So if you bought this peak up here, you're not too happy. You really got wrecked. But you can see that it IPO'd, it hit the market right around $65 a share. And you can kind of see that we just bounced off of that level. So this is kind of a logical level for there to be a bounce. It's also a logical level for it to be a bottom, right? It's quite possible that the bottom might already be in here. Of course, you can't know that, but it is a very logical level to trade if you're kind of looking for an entry as a long-term investor. But you can see that after it IPO'd, it was up only, really just went basically to the moon after it IPO'd. Following its IPO, went up about 60%. So, a lot of people, a lot of traders got into the stock and they ran it up. And of course, they took profits, and now the stock has been down only since June. But I kind of like the setup right now because it is starting to sort of maybe find a bottom here. Of course, it can go lower. Nobody knows, but if you really like the fundamentals of the stock, especially over the next 5 or even 10 years, this is not a bad entry potentially. Now, of course, I would prefer it to go lower because the lower it goes, the better the valuation is. But you can see that, yeah, this is exactly what happens with these IPOs: is they launch with a lot of hype and then they pull back. And this is the time that you want to be watching an IPO, right? When it's down 72%, that's when you want to be buying an IPO, not when it's surging right after it hits the market, right? So let's take a quick peek here at an article from the Financial Times. So why the stablecoin supercycle could rewire banking. Okay, so not so long ago, you knew where you were with money. A central bank like the Federal Reserve or the Bank of England issued dollar bills and pound notes, and you use them to buy and sell things. Okay, pretty standard. If some technologists are right, then one of the newest trends in payments technology, stablecoins, are about to enter a super cycle that will swamp the world with more than 100,000 such payment systems within 5 years. Reconciling those coins, essentially crypto that is pegged to a real world currency, like the US dollar, will require a whole new financial infrastructure. No wonder the establishment is getting jittery. This is going to involve a fundamental rewiring of the financial system, one official told me. So blockchain-based stablecoins have multiple progressive use cases. In countries with unstable currencies, a dollar peg for a stablecoin user might be attractive. Okay, so that's very important. So if you live in a dysfunctional country with a dysfunctional economy, maybe you have a high inflation rate, maybe you have an unreliable banking system, right? Stablecoins are very, very attractive to those individuals because they're instant. There's no banking corruption. They're tied to the US dollar, so you can minimize your inflation risk, right? You can get out of your local currency to get into a currency that is stable, and you can all do this instantly, digitally, right? Just on your computer, right? I mean, gold is good too, of course, but sometimes gold can be hard to acquire. You have to store it. Bitcoin is volatile. So if you have a depreciating currency within your local economy, right? Maybe you're in hyperinflation. You can just go and get yourself some dollar peg stable coins and minimize your currency risk, right? So anyways, in countries with slow or dysfunctional payment systems, they offer an efficient alternative. Yes, of course. And for those who want to trade crypto, they are a route back to the fiat financial system. And that's another big one as well. So usually these stable coins like USDC and Tether are sort of the on-ramp into crypto, right? So if you're on Coinbase, you get yourself some USDC, you get yourself some Tether, and then you use these stable coins to go and buy crypto like Bitcoin, Ethereum, Solana, whatever it may be. And then of course, when you want to go back to the fiat system, you convert back to USDC or Tether or another stable coin, and then you make your way back to the traditional finance or traditional financial system, right? So the current U.S. administration, meanwhile, has embraced stablecoins, seeing them as a valuable source of demand for U.S. treasuries, right? So stablecoins have become one of the biggest buyers of U.S. treasuries. So it's actually very positive for the U.S. government because, in certain situations, depending upon the economy, depending upon inflation, interest rates, it can be relatively difficult to find buyers, right? And that's why you have the Federal Reserve coming in with quantitative easing, right, to lower interest rates. But because you have stablecoins now, they have been massive buyers of U.S. treasuries. In fact, one of the largest buyers of U.S. treasuries. So it's actually been very positive to the U.S. government in that sense. So the disruption to the status quo may be healthy in many ways. Expensive money transfers will face cheap competition. Credit card companies, long criticized for the high fees they charge merchants, could similarly be disrupted. So think about your Visa or MasterCard. They, charge you 3%. Why? I don't know, because they can. Really, there's no reason for them to charge you 3%. They charge you 3% because they can. But now, of course, with stablecoins, they're essentially free, right? The fees are extremely minimal, right? Significantly smaller than 3%. So, if you're a Visa or MasterCard right now, this is potentially a big threat. So just take a look at this chart of stablecoins. So the total market capitalization of stablecoins across the globe. So you can see that this chart is really going parabolic, right? If this chart were a stock, you would be bullish, right? It would be one of the best performing stocks in the entire market. So you can see way back in 2020, so I guess just 5 years ago, the stablecoin market was valued at about 5.5 billion, right? And now today, the total stablecoins in circulation is about 309 billion. So what is that? About an 80x since 2020. So stablecoins have just gone on a massive tear. And really looking at this chart, it's no stopping stablecoins. It's just up and to the right. And you can take a look at this report by Citigroup. So this is stablecoins in 2030. So they have about a 5-year projection here that they kind of argue in this report. So anyways, so back in April, we argued that 2025 would be blockchain's ChatGPT moment, with stablecoins igniting the shift. Now that transformation is unfolding at a remarkable pace. Cryptocurrency company listings, record fundraising, and breakthroughs in technology all suggest that institution adoption is accelerating. This summer has brought a raft of announcements, especially by digital native companies, to bring stablecoins to commerce and real-world activities. In addition, existing crypto-driven stablecoin activity has continued to grow. Issuance volumes are up from approximately 200 billion to start 2025 to about 280 billion. So that's in a relatively short amount of time because this article is several months old at this point, we are revising our stablecoin in total issuance forecast in this report to 1.9 trillion base case, previously 1.6, and 4 trillion bull case, due to strong growth of the market in the past 6 months. So this is by 2030, so over the next 5 years here. They expect stablecoins to be around 1.6 trillion to 4 trillion in 2030. In the current market cap of stablecoins is 309 billion. So potentially Citigroup here is projecting that over the next 5 years, the stablecoin market could 10x, right? So tenfold in just 5 years. So now you can really start to see how Circle is positioned perfectly in this emerging trend, right? They are positioned in an industry that's expected to grow 10x over the next 5 years, right? You're really not going to find another industry that is growing at that rapid pace. And Circle is really nestled perfectly within that narrative. And Circle is not the largest stablecoin at the moment. The largest stablecoin is Tether. So Circle is number 2. However, they have been gaining market share. And of course, Circle is the only publicly traded stablecoin company. So that sort of gives them a little bit of an edge, right? They raised a lot of capital. So I would expect going forward that they will continue to eat into Tether's market share, and maybe at some point they will become the largest stablecoin issuer. And the thing about stablecoins is anybody can issue a stablecoin, right? PayPal just issued a stablecoin. So it's really about who's able to do it first, right? So it's really about having the first mover advantage, and it's also about sort of the economies of scale. It's about sort of the overall network that they build among banking partners, crypto exchanges, et cetera, et cetera. So you really have to capture the market, and whoever captures the market will have, ultimately a network effect. So it's really a network effect business. In the early stages, there's not a very large moat. But over time, a moat will establish itself as the network is built out, right? So the more users that they can get, the more partners that they can establish, they can really begin to establish a very, very nice moat going forward. And if they're able to do that, Circle is really going to print a lot of free cash flow for investors. So let's take a look at Circle's recent investor presentation. And you can see that their opening sort of line here is the global financial system is colliding with the internet. Now you can see here for the Q3 2025 key highlights, you can see under the network growth section here, USDC in circulation was up 108% year over year. So, obviously that's a phenomenal number. You're not going to find a lot of businesses that are growing in the triple digits. You can see on-chain volume was up 6.8x year over year. You can look at their financial results, so 740 million in total revenue, up 66% year over year, with 166 million in adjusted EBITDA. And you can also see here that they're expanding their platform with new partnerships, increasing adoption. They got Visa, Kraken, Deutsche Group. So they're growing their network of partners, which is also great. You come down here, you can see the stablecoin market is growing strongly. So we kind of went over this already. Circle's stablecoin network has a durable and powerful network effects. So you can see that they're kind of positioning themselves as sort of the trusted stablecoin issuer, right? Because they're regulated, they're audited, they're public, they're transparent, they're compliant. And that is a key difference between Circle and a lot of other stablecoin issuers, is that they're not regulated, they're not publicly traded, they're not regularly audited, especially with Tether. So Tether, as we said, is the largest stablecoin issuer, but they're not regulated, they're not audited. So there's some there's a little bit of concerns there as to whether or not they're actually, fully backed in the way that they say they're backed in regards to their US dollar holdings, right? But with Circle, that's not an issue. And of course, when it comes to anything in the financial system, it's all about transparency. Whoever is the most transparent is probably going to win, because whoever is the most transparent is going to get the most significant partners, right? You're going to be able to get like large partners more easily. Right, you're just more credible. So that's what you want to see. So you can see that Circle's network grew strongly, up 6.8% or 6.8x year over year. Meaningful wallets up 77% year over year, and they're gaining share in digital asset markets. Gaining share in digital asset markets remains their priority. You can see that they're increasing market share here. They're at 3% in Q3 of 24. Now they're at 9%. So it's very good, right? You want to see that. So this is USDC share of spot trading. So that's just spot trading. That's not their overall market share. It's just when it comes to spot trading. So this is going back to sort of the more crypto area of their business. And you can see that so you're gaining market share. Binance stablecoin assets held in custody for customers. So it's just on Binance. They're gaining market share. So adoption continues across a diverse range of use cases. So capital markets, payments, digital assets, banking infrastructure, and dollar access. So they're just increasing their partnership. They're increasing their overall, market and accessibility to their stablecoins. So that's all very good. So you can see here that just in this report that they're gaining market share. The overall business is growing. The industry is growing. They're positioning themselves as the trusted stablecoin issuer. So this is all very, very good. All right, so with all of that being said, how does Circle make money? So here I put together a bit of a back of the napkin framework just to describe how they will benefit from the stablecoin boom. Now, of course, I'm just using rough estimates here, just for simplicity, just for the simplicity of math. Anyway, Circle collects dollars, creates the USDC stablecoin, and then invests the dollars into US Treasuries. So essentially, you give Circle your dollars, they mint the USDC stablecoin, and then invest your dollars into US Treasuries. Now, in this framework, I'm using a 4% Treasury yield. So as the stablecoin market grows, they will have more USDC in circulation, meaning that their Treasury holdings also grow. So if they have 50 billion USDC in circulation, they collect the current Treasury yield on that 50 billion. Which is $2 billion in net income. So if the stablecoin market grows 10x, they will have 500 billion USDC in circulation. So you went from 50 billion USDC in circulation to 500 billion USDC in circulation. So assuming a 4% yield on their holdings, they will make an annualized profit of 20 billion. Okay, so you go from 2 billion to 20 billion, right? That is a 10x increase in their net earnings. And Circle's current market cap is 20 billion, right? So now if the stablecoin market 10x's, like many are predicting, a $20 billion market cap is extremely reasonable, right? It's very low because they could potentially be earning $20 billion in net income, right? So for an asset-light business model like Circle, a reasonable multiple for the company can easily be 20x earnings, meaning a $400 billion market cap. Now, this essentially implies a long-term potential upside of 20x from the current share price. Now, of course, this sort of framework makes a lot of assumptions, and it also does not take into consideration operating expenses. It also makes speculations about the treasury rate, right? We don't really know what the treasury yield will be 5 years from now or 10 years from now. So this framework uses a 4% treasury yield. Now, of course, if interest rates were to somehow go higher, that'd be extremely bullish for Circle. But of course, if interest rates were to go down to zero for whatever reason, obviously the numbers would look very different. But I'm just trying to put together a framework to easily explain how Circle makes money and how they will continue to make money as the stablecoin market grows. So it does make a lot of assumptions, but I'm just putting this forth for the simplicity of understanding how Circle makes money. So as an investor, my goal is to identify undervalued growth, right? I want to find great growth stocks before the rest of the market, right? Before a company's growth is actually appreciated by Wall Street. Now, in the case of Circle, they check a lot of boxes because number one, as we highlighted earlier in the video, they are in their post-IPO correction phase, right? Circle is down 73% from its all-time highs, right? So we are in the middle of its post-IPO slump. And then of course, Circle's in a very unique position because they are operating in an industry that is hyper growth, right? Their industry, just the industry itself in which they operate, is expected to grow 10x over the coming 5 or 10 years. Right, so that's a very unique proposition because there aren't a lot of industries that are growing at that rapid pace. And then on top of that, Circle has a very asset-light business model, right? They simply mint USDC, they take your dollars, and they invest in US Treasuries. It's a very simple asset-light business that's also very scalable, right? It's extremely easy to scale, right? Their fixed costs are very low. So that's all very bullish, right? So it does have the makings of being the kind of company that can print a lot of free cash flow. Now, of course, there are risks involved with Circle because number one, because it's a brand new industry, there's going to be a lot of competition that emerges, right? Because anybody can print a stable coin, right? PayPal just released their own stable coin. And I'm going to assume that a lot of other large companies and institutions will do the same. However, it's really about economies of scale. It's really about who can capture that market, because whoever is able to capture that market early on at a large scale will ultimately end up creating a network effect. So if you can position yourself as one of the trusted players, one of the players who are most transparent, most trusted, right? They have their reserves audited, right? It's all about trust. You want to be the trusted player. And Circle's really trying to position themselves as that trusted, transparent player. And I'm very happy to see that they're taking market share. Now, if their market share was stagnant or declining, I would not be bullish on the stock at all. So as long as they are increasing their market share, I will probably remain bullish on the stock. Now, of course, they just went public recently, so there's not a lot of data on this company. So as everything stands right now, I am bullish on the stock, but I have not opened a position yet. Ideally, I would like to see it go a little bit lower just to kind of have that, I guess, margin of safety. But, overall, the industry itself is growing rapidly. The company's taking market share. They have the ability or the potential to really create a strong network effect. So there's a lot here that I like, and I'm going to continue to watch the stock, and I'll probably likely be adding shares if the stock goes lower. I would really like to see it under 50 to really get bullish on the stock, but I would say that I'm generally pretty bullish on the stock right now, and I think it's underappreciated by Wall Street. I think that crypto has been pretty weak the last 6 months or so. So it's kind of been tossed to the side. It's kind of been forgotten about. So I really see them having a significant bounce at some point in the future, maybe sometime in 2026. They're probably going to have a pretty significant bounce to the upside, regardless of whether or not the long-term thesis actually plays out. I think that even if the long-term thesis does not play out, they're still going to experience a bit of a bump in the short term. So it's definitely a stock that I'm going to continue to watch. And perhaps I'll open a position at some point as well. So all right, guys, thank you so much for watching my video on Circle stock. If you like what I've had to say, hit that like button and subscribe. All right, guys, thank you.